July 15th, 2024. Today, we got back to that all-time high. You can see we had a big wedge. And we ended up getting back to the all-time high and getting a pretty big reversal down. We had a pair of bull bars on the open, so I'll just start. Bar one, a bull bar closing near its high. We have big down here, and then we have big up. So sideways ends up probably being the most likely scenario. I would assume, sorry, I would assume that we're going to get back to the bar 71 low. Why? Because it's the breakout point. And this, after the gap up, looks like a trading range to me. And so if we're in a trading range, the most likely scenario is that the gap is going to close with the breakout point. And on bar two, the gap does end up closing with that breakout point. So bars one and two, we have consecutive bull bars closing near their highs. When you get consecutive bull bars closing near their highs, it's generally considered a bull trend from the open. Obviously, it doesn't mean that it's going to be a big bull trend, but that is the qualification for always in long, and I suppose a potential bull trend from the open. What's the problem with buying the close of two? Well, if you're buying the close of two, you're buying after a huge gap and consecutive bull bars. If you think about it, it's probably this can be considered the spike, and we had pullbacks on the tail of one and a pullback on the tail of two as well. So this might be a spike, and one and two could be the channel reaching the resistance point. So we might have to pull back here. And in general, there's an 80% chance of a trading range open and an 80% chance of a minor reversal lasting at least 5 bars. So if you're buying up here, you're buying in a resistance area when you know there's an 80% chance that we're going to end up getting some sort of minor reversal lasting at least a handful of bars on the open. So it's really not all that ideal. If you did decide to take that buy, you can't put a stop below the low of the day because guess what? Consecutive bull bars, there's probably more buyers down here than sellers. And since the most likely scenario is a trading range open, we probably will end up coming back down here at some point. So if you're buying the close of two, you're buying small, you're putting a stop probably at least a measured move down, and you're adding on below bar one, most likely. Bar three, a bear bar closing near its low. It's a pretty big bear bar, so it's possible that we had consecutive bull bars closing near their highs and then outside down three, so bull trap. What do the bears want? The bears want a head and shoulders top, left shoulder, head, right shoulder. And they want a head and shoulders top and to get a bunch of follow through basically. They want bar four to look like bar three. The problem is the gap up is pretty strong. You could argue it's also some sort of double top with, 72, 73, and the neckline 78, and the bears want to break out below the low of the bar. Or the low of bar 78, but it's not all that likely that that's going to happen. The context of the day made sense for us to go down, and you can tell the bears wanted some sort of head and shoulders. It doesn't necessarily have to be here because even if we pulled back and got a higher high double top or like a big low two on the open, it would still be a head and shoulders pattern so long as the reversal comes before we get above the bar 54 high. Obviously, that is not what ended up happening today, but I think that is a lot of what the bears were looking for. Bar four, disappointing follow through. It's not all that surprising to get disappointing follow through if you're selling below three. I think maybe 40% chance, maybe 30 to 35, I don't know, I'll say 35 because I would say 30 to 40% chance selling below three that this is just going to be the high of the day. Doesn't mean we're going to go straight down, and we probably won't considering bars one and two were strong consecutive bull bars. So there's probably buyers below, so you would expect some sort of bounce here, which we do get on bar four. So what do the bears see? The bears see bad follow through for bar three. However, the bad follow through, let me back up. What do the bears see? The bears see disappointing follow through, but again, relatively expected with bars one and two. If you're taking a sell like three, it's probably reasonable to just put a stop above and take a chance you've seen the low of the day and just basically sit in the trade. It's not the smartest thing in the world to do in this context because it's lower probability that you have seen that low of the day, but it's still an okay thing to do to take a chance. Inside bar, bar five, so disappointing follow through. And then you can see when we got back down to these prices, the bears who were selling as the market was going down, what were they hoping for would be? They were hoping four would look like three. And instead, four looked like a doji bar, like four. So they're using bar five to take profits. It's an inside bar, and the bulls see a high two on the open. So you could argue it's a high one since the gap up is a bull bar and now consecutive bull bars. We hadn't traded below another bar. So it's reasonable to argue bar five is a high one instead of a high two on the open. But really, what the bulls see is also a lower low double bottom with bar one. So however you want to look at it, it's a possible low of the day. But again, why do we have such a big tail on the top and bottom of 4 and such a big tail again on the tops and bottoms of 5? Another inside bar, bar 6. So we have an II pattern, good for the bulls. They're hoping that this ends up being the low of the day. You can make an argument that bar 3 is the sell climax, and then we have an inside pattern, bar 5 and 6. So an II after a sell climax. I gotta. And a couple examples of it. Generally, this is a pretty or it's not that common, but it's usually pretty reliable. You get a sell climax on the open, and then an inside pattern in a rally. Was it? No, sell climax and then an II. Not exactly the same type of pattern that we're looking for, but generally on the open, if you get a sell climax and then an inside pattern, the market is going to go. You can see here II at for potentially a measure move up, and possibly this will be the low of the day. However, the bigger the sell climax is, the thing about this that's different is usually with that pattern, the sell climax is pretty strong, and so if we're going to rally after the sell climax, because you remember in the first example I showed, it was a pretty big sell-offs, not quite like this, but similar. And when you get that type of sell-off and then the II, usually if it's going to be the low of the day, the market's going to be in a bull channel upwards the rest of the day. It's not going to just be some really strong bull trend like this. The reason that this was possible is because it's only a 1-bar sell climax and we have consecutive bull bars here. So it was reasonable to think that we were going to go at least a little bit higher today. Bar 7, a bull bar closing near its high. It's good follow through for the bulls who bought above 6 as the II after the sell climax. But it's now a pretty big bar with pretty big risk, and you have a bad sell signal bar. And this is still a trading range open, so it's difficult to want to buy up here. Can you buy the close of 7? Just put a stop below the low of the day and say we've seen the low of the day? Maybe. I mean, at the close of bar 6, 50% chance you've seen the higher low of the day. And by this point, it might be, 55. But the problem is that the opening range is pretty small. It's only 15 points. Usually, if you have a bigger opening 5 or 6 bars, the odds would be increased that you've seen the higher low of the day. But since it's smaller today, I think the odds might be a little bit worse than usual. So maybe on the close of bar 7, maybe it's 40 to 45% chance that we've seen the higher low of the day. So it's probably not wrong to buy above 7 and put a stop below here and just bet you've seen the high of the day. But I would not personally do that. We are still on the sell below 3. 8 consecutive bull bars. So bar 7 and bar 8 are consecutive bull bars. However, bar 8 is really not all that great. It's not closing near its high. It's got a big tail on the top and a big tail on the bottom. So it's not as good as it could be. What were bulls hoping for? They were hoping 8 would be another really big bull bar, maybe closing above the high of the day. But instead, bar 2, you can see when we got back to the high of bar 2, where the traders initially bought above, they used that rally to sell out of their longs, and that's what's causing the tails on both sides, or that's what's causing the tail on the top of 8. Is bulls up here not being interested in buying more and instead selling out of their longs. So when bulls are selling out of their longs, where a trader is going to be more interested in buying, maybe around 50% pullback. Those of the bodies, 7 and 8, the 50% pullback. 9 pulled back to around 50%. There would have been buyers below bar 8 had we gone there. However, bulls were so eager to buy that they ended up just buying the low of the bar, and they were not able to get filled at the low below the bar. So they just got filled at the low of the bar instead. So a little bit of urgency on the side of the bulls, but it's still really not all that good. Bears are hoping 9 is some sort of double top, 3, 9, and bulls are hoping that they started the bull breakout. We are always in long, something to note. I don't really know. You could argue 3 made us always in short, but the big problem with that is how big bar 1 is, and then we have how big the gap is, and then we have consecutive bull bars closing near their highs. So 3 was a really, really big bull bar, and it definitely undid bars 1 and 2. However, I'm not all that sure that we really clearly flipped always in short on bar 3. And we were definitely always in long 1 and 2. And we definitely went back to always in long bar 7. So we might be still always in long the entire day. The only time the bears can make an argument is bar 3. So anyways, bar 9, a bear bar. Bears, they see an inside bar and they're hoping it's a double top with 3. But like I said, bulls are hoping breakout pullback. Bar 10, an inside bar again. So we have an II pattern, 9, 10. We also had an II pattern, 5, 6, and another II pattern, 15, 16. What does that mean? What do you do with that information? Well, the market's in breakout mode. So generally, breakouts of II patterns are relatively 50-50, and there's a 50% chance that the first breakout is going to fail. Now, you might think that that's not all that useful, but what it really means is, up here, if we start to get the breakout on bar 11 and we get a sharp reversal down on bar 12, that might make for a credible sell. So you can see on bar 10, bears hoping to get a breakout below. What they really wanted was bar 10 to be a bear bar closing near its low somewhere down here so they could sell for a lower high double top and hope we get a breakout below the neckline. In general, 40% chance. Let's say, I'm going to use the bodies because it's more conservative and the tails would have been a really large measured move. But in general, if, let's say, 10 had closed on or near its low, 40% chance that you're going to get a measured move down, a breakout below the neckline and a measured move down. But usually when you get that pattern, it's hard to hold the whole time because the market reverses up a whole bunch of times. But instead, you get a bull bar on 10. It's not really a very good bull bar. It's potentially a high one for the bulls. So what do the bulls want to see? They want to see a couple of good bull bars and a breakout to the upside. And maybe a strong breakout above the bar 3 high. It's notable the bears who sold above bar 3, even if they scaled in, they weren't really able to make money here. We were never able to get back to the bar 6 high. So that's a potential magnet later in the day if the market starts to reverse down. 12, 3 consecutive bull bars. We're also in a bull micro channel. So from bar 5, 1, 2, 3, 4, 5, 6, 7. So we're in a 7-bar bull micro channel. So odds are at this point, the first reversal down will most likely fail. 11 is the breakout above the II for the bulls. And what do the bears want? Bears want a big reversal down on 12 to make show traders that the reversal up failed. And bulls are hoping to get another bull bar and continue the micro channel. And we get bar 12. So we have 3 straight bull bars, potentially, going to get a breakout here for the bulls, but to the upside of the current range. So the first 12 bars. What do they want? They want a measured move up, maybe somewhere up here, which is basically where the bar 21 high was, or 20 high. So that's why I guess there was profit taking there. The measured move up, the opening range led to some profit taking at the bar 20 high. 3 straight bull bars, good for the bulls. The bears are really hoping we're gonna get a sharp reversal down pretty quickly here. And they're not totally wrong for thinking we might. I think that, while we do have a lot of bull bars here, they're really not all that strong. This looks like a leg in a trading range. And so you're going to get a give up bar, I think, in either direction. Could be a give up bar for where the bears give up and you get what you got on 13, where they say, okay, it's a bull micro channel. It seems like we're going higher. I'm just going to wait till I can sell higher, and they'll give up. Or you could get, a bull give up bar where they say, well, this looks like it's probably just a leg in a trading range. And we could have 3 legs up, 1, 2, 3, something like this. So it's obviously poorly drawn, but you get the point. So we're probably going to get a give up bar in either direction, and then we get a give up bar, bar 13. What do the bears want? The bears want that same wedge. It's a little bit clearer now. 4, 8, and 13. And the fact that 13 has a tail on the top will discourage a lot of bulls from buying, since it is a potential wedge. So we have a possible wedge, 3 legs up. What's next? Well, again, the bears want a big bear bar closing near its low. The bulls, they see a new buy the close bull trend, and they see the breakout as successful since it closed far above the bar 3 high. So they're hoping we continue to rally. We have a doji bar on 14. Again, from bar 5 to now bar 14, we have a 9-bar bull micro channel, meaning we have not traded below another bar for 9 bars. So it's pretty extreme, and we're probably going to start to go sideways soon. But again, if bulls can get good-looking bull bars here, then it's a reasonable chance that we continue to the upside. Bar 15, a bull bar closing near its high. I thought bar 15 was interesting. Again, on the one hand, it's possibly a wedge, and you're trying to get a breakout above it. It's a tight bull micro channel, so the bulls have that going for them. And we have an open gap with the bar 3 high. The open gap with the bar 3 high is important. The odds are that if we can keep this gap open and we can basically not get a bear bar closing near its low on bar 16, this could go quite a bit higher. We might have to get back to the all-time high to see what's there. And there's potential that if the bulls keep this gap open, that they're going to start some sort of small pullback bull trend day. What's it going to look like if we get the small pullback bull trend day? Well, first off, usually when you get the kind of leg 1, then pullback leg 2s, you get a reversal up around bar 40. However, this was too steep of a sell-off for me to think that it was going to be a small pullback bull trend day. Usually you're going to start to go more sideways if that's going to happen. You're not going to get a huge bear bar like 24. Market, if we were going to get a small pullback bull trend day, probably would have gone just more sideways here and then gotten a second reversal up. That would have been that would have made more sense for the bulls. But anyways, bar 15, it's an inside bar. It's a high one for the bulls, so it's reasonable to take the buy above, hoping that we go higher. This kind of stuff will happen a lot where it'll give you the good buy signal bar and then it won't trigger it on 16. But it's, again, another II. Market is still in breakout mode. Still reasonable to just buy above 15, basically betting the gap stays open. And if the gap closes and you get a bear bar, you can just get out. 17, another bull bar closing near its high. So we're probably going at least a little bit higher. How much higher? I'm not sure. I think at least to the all-time high. But, past that, I'm not that confident. But again, we have potentially an open body gap here. And we might get a second open body gap. You can see we created a gap with the 16 high and the 18 low. And we have the very clear open gap of the 3 high and the 14 and 15 low. So it's very reasonable to be long right now. 18 consecutive or more follow through for the bulls, but tails on the top. So really not as good as it could be. How much higher are we going? Again, I don't know, but we're in a really long bull micro channel, bar 5 to bar 18. So the first reversal down will probably fail. However, it's still a bit dangerous up here. This is unusual to get basically a 20 bar micro channel and then have this big of a bar happen and those bulls never let out at any point during the day. It's pretty unusual for that to happen. This, a lot of times, will go more sideways first, but pretty unusual. So in saying that, what I'm trying to say is that I do think we might have to come back here at some point, or into this area. At least if we get a reversal up tomorrow, let's say, I don't know, let's say we open here and we get like some sort of double bottom with this, my profit target is going to be the midpoint of wherever that credible reversal would be and the low of this bar. So if the reversal starts here, and that's obviously the low of the bar, my profit target would be the midpoint somewhere up here. That's just for me personally, how I would like to manage a trade tomorrow, should I take it. 19, more follow through for the bulls. So we have another really strong bull bar closing near its high, big bull micro channel. We're probably going at least a little bit higher, but this is getting climactic at this point, right? This is a bull channel, and we're getting a climactic breakout above it on bar 19. 20, a failed. It's not all that great. Bulls might start to exit below 20, but they definitely don't have to. It's a pretty small doji bar, and there's very likely going to be buyers below with how tight this micro channel has been. So again, it might be the end of the bull trend, but probably just going to start to go sideways. And then you get a climactic bar on 21. This is a profit taking bar. This is the best looking bar pretty much in the whole trend. I mean, it's the biggest and best look, the smallest tails. So I think 21 is the best looking bar. And we've been in a bull, 20 plus bar bull micro channel. I would just get out of your longs up here and just take the profit and be happy with it. And if it goes without you, which it occasionally will, probably 30 to 35% of the time, it'll just go without you. But I think better to just wait and see what happens. 22 consecutive bull bars, but I don't think this is worth buying. I think this is, again, very much a profit-taking area. This is another open gap, but I think this gap's going to close. The bears who are selling above 20 with a wide stop are probably going to make money. 23, another bull bar, but a tail on the top. Again, this looks really overbought to me. Strong breakout above the channel high. I would just let it go. If it's gonna go, then that's great. Someone else can make the money. And then 24, bulls dump their longs. If you didn't get out of your longs for any reason, you just need to get out below bar 24. Way too big of a bar to stay long. Do you sell below 24? You probably can. You can just bet on a failed breakout above the 18 bar range, and that this is the high of the day. So if you're taking the short below 24, you're not exiting above 26. You took the sell, put a stop above there. You probably put a limit order to take some profits below the low of the day, and you're risking 11 points trying to make 23. So you have 2-to-1 true risk, and at the bare minimum, this is going to work 4 times out of 10. So it is at least a bare minimum win trade, but it might be more like a 50% trade, because when you're in a trading range, I think 24 confirms the market's in a trading range. And when you're in a trading range, trades that seem more like 40% are usually more like 50%, and trades that seem more like 60% are usually more like 50%. So very reasonable to sell below 24, put a stop above, and take a chance that this is the high of the day. 25, consecutive bear bars closing near their lows, enough for a second leg sideways to down. We're probably going to pull back soon from this, but if you're selling down here, you cannot exit above 26. You have to wait and just accept that your premise is that this is the high of the day. It's probably going to be pretty uncomfortable to sit through. So if you're selling here, you probably want to walk away for a little bit because it's going to go more sideways than straight down. 27, a bear bar closing near its low. It's a low one short, so 25.26 was the start of the spike. 24.25 was the spike, and a pullback to around 50%, 26. 27 I think is a credible low one short. 26 is a pretty strong bar, so it should get a second leg sideways to up, but it's probably not really worth buying above 26 because 24.25 is so strong. We're at least getting back to the bar 25 close. So 27, a bear bar closing near its low. But what's the problem with selling it? Well, there's probably buyers below 26 for at least that second leg sideways to up. If you did take the sell, again, I don't think selling below 27 with a stop above 27 makes a lot of sense. It's a low one short. I think you need to sell below 27 with a stop above the high of the day. So 28, you can see there were buyers below 25, but really they were buying because of how strong 26 was, betting on at least a second leg sideways to up. The traders who bought, they scaled in lower, and you can see they ended up using the bounce to sell out of their longs. So 29, an inside bar, a doji bar. I think it's disappointing for the bulls that the bears have gotten 3 straight bear bars here. You don't really want to see 3 straight bear closes if you're going to get a strong reversal up. So this makes the reversal up argument, or any sort of reversal up, a little bit weaker for the bulls. And we trade above 28 bulls, hoping some sort of higher low double bottom, lower low double bottom, but it's a bear bar. So 30 follow through, but for a bad looking bar, we're probably going to go pretty sideways here, sideways to down. This 24.25 might be strong enough for 3 legs down. So 1, pullback, 2, potentially pullback 3, but 31, a bear bar closing near its low. At this point in the day, you should probably start to consider the possibility of an endless pullback because, again, 24 and 25 are so strong, and it means that a trading range is what's most likely here. If we, I think it's pretty safe to say it's probably not a bull trend day at this point. Once you see 24, 25, and by 31, the bulls are still failing. So if it's a trading range day, what does that mean? It means we're probably going to close this gap, and if we close this gap, we'll probably get back to the bar 6 high to let the traders who sold there and scaled in around break even. If we get down here, we might just get to the low of the day for a failed breakout at the 18 bar range and a reversal down. So you can kind of use just the logic to think we're probably going here, we might go here, and maybe we'll go here. 32, consecutive bear bars closing somewhat near their lows, but tails, again, consecutive bars, not good for the bulls. I think everyone wants to sell a pullback, and when everyone wants to sell a pullback, sometimes you just don't get the pullback, and instead you get a collapse. So 33, a bear bar closing near its low, 3 straight bear bars. We're breaking out below the bear trend line. This might be the start of the collapse. Does it mean it has to be? No, it could be the start of sideways. It ended up being more sideways to down. But this could definitely be the start of a collapse where we just collapse down to yesterday's low, to the day's low. 34, more follow through for the bears. Again, we're probably going at least a little bit lower, 4 straight bear bars, but I don't know how much lower. Reversal up on 35. I haven't looked. I assume it went to around 50%. Come on, line up. So somewhere it closed around 50%. Around a 50% pullback, or reversal up 35. Not worth buying. I think, probably get out of long or get out of shorts if we trade above it. But this has, been such a strong move down with these 4 bars that it's going to get a second leg sideways down. So it's not worth taking a buy above 35. You can see it doesn't trigger on 36. So low one short 36, but not really that great. If you look, there's a big tail on 36. There's probably going to be buyers not too far below. You would imagine that the bears who sold the close of 34 are disappointed in 35, and maybe they were hoping 36 would be a big bear bar and a huge low one short, but instead there's a giant tail on the bottom. So it's really not a very good low one short. Bulls they know that the market's probably going to pull back, but they're betting that 35 is enough for them to get some sort of credible reversal up, even if we have to pull back first. So you can see 37 tested back to around the 34 close. The bears who sold the 34 close scaled in, are using the sell-off on 37 to exit their shorts around break even on their second entry with a profit on their first. We have an inside bar 38. Bulls, they're hoping it's some sort of higher low double bottom, but it's a doji bar, so it's not worth doing anything, and I would just rather wait. And then 39 turns into a giant doji bar, which is a big problem. The bulls knew we might have to go sideways from 35, but it was a problem that it didn't trigger above 35, meaning less bulls were triggered. And when they scaled in, you can see they just used the bounce on 39 to sell. Bulls were hoping we would get some sort of reasonably strong looking bull bar up here. And instead, bulls are failing to get a reversal. So big doji bar 39, really disappointing, I think, if you're a bull. We probably should get a reversal up today. I was kind of surprised that we didn't get, we did get a reversal up, but it was hard to buy it. Usually when you have this kind of open and these really good bull bars on the way down, I don't know, you most likely, maybe 70% chance, you're going to get some sort of reasonable bounce. And I suppose we did here, but it's usually a little bit more tradable than that. I was kind of surprised we didn't stop in here since we were around the open of the day and the low of the day. So I thought personally, when we were starting to get this reversal up, that we were going to bounce, maybe back into this area. If bulls are lucky, back up to the top of the bear channel. This is a spike, 24, 25, pullback, and then a bear channel. 40, a bear bar, but a big tail on the bottom. So not really sure how much lower we're going to go, because it's a really tight bear channel, so we might have to go a little bit lower, but this is not overly bearish. Traders are clearly looking to sell more of pullbacks, and then they're using the lows to take profits. So it got really difficult for stop order traders in here. What do the bears want? They want a big breakout below. We could argue you have a wedge, 20, 25, and 35, but we ended up getting a bigger wedge, 25, 35, and 43. But anyways, 41, a reversal up for the bulls. They're hoping it's going to be a reversal up, but it's a bear bar, and this is a tight channel down. It's not really worth taking. Probably just better to wait. The bulls, if you bought the close of 35, the market shouldn't be down here. This, 6 bars later, this is a big problem for you, and that's why you get disappointing follow through on 42. Bulls just using any bounce to exit their longs around the moving average, and then 43 basically is the give up bar for the bulls, where the remainder of the bulls give up. It's a big wedge, 25, 35, and 43. An inside bar, 44, a bull bar, closing somewhat near its high. I think it's a credible midday reversal if it can trigger above, and you can see it doesn't, and we get an inside bar, 45. I think it's a little disappointing for the bulls that we didn't trigger above this, but I still thought we were getting enough bull bars up that we might have to get some sort of bounce. And one of the reasons I thought that we might have to get a bounce in here is because if you look at the 15-minute chart, this is going to be a bull spike, and we never tested back up to the high. So I thought we might have to get back to at least the midpoint, like I had been saying earlier. So you're around bar, around over here, basically, we had this, and this does a good job at reversing this, but this is still one pullback, 2 pullback, 3. So I thought, we were going to bounce somewhere into the middle at the least for the bulls. So I was surprised when we continued to sell off. So II 44, 45, but low in a trading range for the bears, really not worth selling. And then a reversal up 46 for the bulls. You can take it. I think, part of me thought that if we were gonna get the rally and we were gonna bounce, that we probably would have just gone ahead and triggered up above bar 44. I thought it showed kind of a lack of urgency that 44 was not able to close on its high, and that 45 even existed, and wasn't a follow through bull bar. But either way, 46 is probably still a credible reversal up. It's true the channel down is pretty tight, so that might get a second leg sideways to down. But I still thought odds were that we were going to get some sort of bounce. 47 consecutive bull bars, so the bulls who were hesitant to buy above 46 might buy above 47, and you can see they just got trapped immediately. If you bought above 47, well, first off, the thing is, these bars where the market doesn't come back to those highs, especially if it's like really big bull bar like 26, they become magnets, right? So, and then you can look at 46, 47, really strong bull bar here and reasonable reversal here. So the market's probably going to, 60% chance it's coming back here, 80% chance if you scale in, it's going to reach the midpoint. So I thought that while it was reasonable to buy above here, but I thought also you probably have to have a stop below the low of the day, and it's not going to go straight up, right? This is a pretty tight channel down. So if you're buying here, the market's probably going to oscillate sideways a little bit first before it goes up. So you can sit out of the buy, and occasionally, you're not going to have another good chance to get in. But I still did think there was a pretty reasonable chance we were going to get a reversal up. And I was surprised by how big 48 was. Consecutive bear bars, 48, 49. We might go a little bit lower, but why is there a tail on 49? So, if we were going to get a big breakout below the wedge, which is what the bears want, they want the breakout 25 or below 25, 35, and 43 to succeed and get a measured move down, something like this. So they want to get down here below yesterday's low. Oops. Sorry. They want to get down here. Sorry, not yesterday's low. They want to get down here, though. Get the breakout down below yesterday's close. But if they're going to do that, 48 and 49 should probably be stronger. Why are their tails 48, tail 49? They're not consecutive bars closing, or they're not closing near their lows. That's disappointing. You can see we weren't even able to trade below 49 because bears started buying back shorts, and that's what's causing 50. So 50 bears, it's a low one short, but it's not very good. There's probably going to be buyers below because it's a bull bar, and to me, this is looking like a trading range. We also know that the open of bar one is the open of the day and the open of the week. So it's probably going to become a magnet. And you can see we bounce back into that area. 52, it's a low one short for the bears, but it's a bull bar, probably buyers not too far below. 52, a bear bar, but you can see tested back to the bar 49 close. Bears started buying back shorts. We're probably going to get a second leg sideways to up from 50 and 51. Some traders would argue on a lower time frame, 50 and 51 is two legs sideways to up since the tails, but that's more of a minor reversal, a minor pattern, and the reversal down 52, not very good. 53, a bull bar, a huge tail, a lot of overlap. The important part, I think, about 52 is that it closed the gap with this low. For the bears, we're hoping that the bulls who bought below the day's low and tried to scale in, so they bought the low of the day, and they scaled in maybe, let's say, the close of 49, or maybe an arbitrary, 2-3 points below the low of the day. They were hoping that we were going to get back to the low, and we weren't able to on 51. So the bears wanted the sell-off to continue and be really steep, but instead, 53 overlaps with those lows, letting those limit order bulls out, meaning that limit order bulls are making money, which is a big problem if this is in a bear trend. 54, disappointment. This is starting to look like a final flag and a tight trading range, which is a final flag. So in general, if you have a final flag, you want to look for a breakout below it and then a reversal back up. So ideally, 58 would have been another bear bar, and then you get a big reversal up on 59 or something like that. But we did not get a very easy reversal up today. I thought it was hard to buy above 55. You could buy below 53 because, again, bad low too short. Excuse me. But we might end up going more sideways here. 54, again, bad low too short below 53. And 55, a bull bar closing near its high. The bears want it to be 3 pushes up. First push to 51, second push to 53, third push to 55. So they're hoping it's 3 pushes up and then we get a reversal down. You could buy above 55, but you're buying high in a tight trading range, so you probably want to have a reasonably wide stop because you can't put a stop down here. You probably need to buy more below the low of the day, if anything, since this looks like a final flag in a tight trading range. And even if we get a small breakout to the downside, we should come back to this price. So 56, disappointing follow through, but that's because it's a tight trading range. And then we get an outside down bar 57, but probably buyers below the bar 49 low. 58, another inside bar. So it's an IOI, 56, 57, 58. But it's pretty hard to buy above a doji bar in the middle of the tight trading range. So yes, IOI final flag, but I don't know. I'd probably just personally leave it alone. A big bull bar 59. I think the context was really good for the reversal, but obviously your signal bar just didn't end up being what you needed, which can happen sometimes. Really big reversal up 59, but a tail and not closing above the moving average. Hard to buy. You probably can, but I just think hard to do. We'll probably get back to the open of the day right here. 60 consecutive bull bars, but a big tail on the bottom of 60, tail on the top. It's okay to be long. We're probably always in long. I think we flipped always in short here, and we've been always in short pretty much the entire way down. So 59, 60, we're probably going back to this close. I would imagine the 47 close, since bulls who got there did a reasonable thing and should be let out if they were scaling in. You would have had to have a pretty wide stop if you were doing that. But it was not an unreasonable thing to do. So 61 trades back to around the bar 47 close, and we find sellers up here. 62, a bear bar, but I think it's mostly due to profit taking. Bears are hoping it's a bull trap. We get a big reversal down, but I think if we were going to sell off, we would have done it a little while ago. So we're probably going to go mostly sideways here. 63, disappointing follow through for 62. 59, 60, and 61 is going to get a second leg sideways to up. Sellers above 63 during 64. Probably going to get a small second leg sideways down from 62, 63, but I'm not expecting too much more from the bears here. 65, an inside bar, another reversal up 66, probably going to be sellers around the bar 61 close if we get there. An inside bar 67, buyers below, sellers above, and then an outside bar 68. I think probably just going to end up going more sideways for most of the rest of the day. I thought we were around the open of the day, so we would oscillate around the open of the day for the rest of the day. And instead, what ended up happening, well, bears, they wanted some sort of wedge, 1, 2, 3, big overshoot on 2, something like that. Maybe a spike, and then a wedge channel, 1, pullback 2, pullback 3. They were hoping got that, and then 72 closing near its low, and they wanted the new low, which, I would not personally sell 72 right on the moving average. Some traders might, but disappointment 73, and we ended up getting the sell-off, and it becomes a lower low. So here's the bear channel line. Trend line break, lower low major trend reversal on 77. So maybe you can take the buy above 77, but it's so late in the day, it's hard to do so. For stop orders, I would not buy 1 or 2. I think 3, low probability that you've seen the high of the day, but the bar is big, so the risk is big. You really only want to take the lower probability trades if you have a lot less risk. You maybe buy above 7, but I'd rather wait. And 7 and 11, we're always in long. We haven't been closed below the moving average yet today, so it's credible for the bulls. But again, I think it's lower probability, and I would still rather wait for the breakout. 15 makes sense. You'd get triggered on 17. You can buy 17. You can buy 19, but it's getting climactic. And at this point, when you get 21, I would just get out. 24, you can sell, betting you've seen the high of the day. You can sell at close 25, kind of the same premise, or you wait because you're probably going to get a pullback, right? With how strong the move up was, we're not going to go straight down to the low of the day. So you're probably going to get a pullback, and some bulls, knowing that, they just wait for the 50% pullback and they scale in when they get it. So they'll end up selling more up here rather than weak bears. They'll sell here and they'll exit above 26. Strong bears are selling and selling more at the 50% pullback, knowing that we weren't going to go straight down after we got this. 27, it's a low one short. You can still take it for the same reason that the bears sold the close of 25 or sold below 24. 26 is pretty strong, so a little bit disappointing for the bears how strong 26 was, but the premise remains valid. 31, a bear bar closing near its low. Possibly a third leg down, but not really worth doing anything. If you're, not worth trying to get long. It's always in short in a bear bar closing near its low. Sell the close 33, maybe 32. Maybe 34. Again, you're hoping on a collapse if you're taking these sells, and bears, I think, gave up on the collapse 35. So that's why we started to go sideways to down. I thought it was reasonable to look for I thought it was disappointing that 44 closed the way it did, and that it was not able to get, we're not able to get above 44 on 45. I thought 46 was credible, but we probably should have already reversed up. Sometimes if you get 2 credible reversals, 35 and 44, and they're not able to trigger, it makes it less likely that when you get the reversal, that it's going to work. So I still thought it was credible at 46, maybe 47, but usually if the market gets 2 big reversals up and both fail or neither is able to trigger, it's lowers the probability a little bit for the bulls. You could buy above 55 with a wide stop, I think, but that's about it. And then, I would just leave the rest of the day alone. On the daily chart, I think, it's basically a doji bar. It's really not all that great, but you can see we're probably going to start going down. Bears are hoping it's some sort of higher high double top, or we're going to stop going up. But that way, we're probably going to start to go sideways. I don't know, how far down we go. I think the bears need a better signal bar than this if they want some sort of, good looking sell off. They're going to need to do better than just a doji bar. So we'll see what tomorrow brings. But on this chart, again, I'm thinking sideways probably soon. We'll probably have to pull back to the moving average. The weekly chart, I guess it's a new week. Bulls, they just want another bull close here. Ideally, one that looks kind of like this, so that this can be looked at as a pause bar, and maybe we get another measure move up. But I do think we'll probably get a bear close this week. And yeah, that's pretty much the day.